our stock of the day. It is the retailer Harvey Norman, has reported a solid lift in underlying earnings despite more challenging retail conditions in the second half. I guess goes to Ben's point there, just what's ahead. Underlying pre-tax profit rising almost 11% to 654.7 million in the year to June, while reported profit increased 5% to 790 million. International retail, a key contributor there, with profit up more than 35% to 92 million. New Zealand, Ireland and Asia all delivering strong growth, although the UK remains a drag as Harvey Norman continues investing in its expansion there. Looking ahead, it plans further store expansion, including a second UK store opening, new stores in Malaysia and a flagship in Croatia. Also planning further Australian store relocations and refits, supporting its broader growth strategy. Harvey Norman will pay a fully franked final dividend of 13 cents a share, taking the full year dividend to 27.5 cents a share. So what do our experts think? Andrew, I guess just going through those results underlines this is really a property company as well, isn't it?
Yeah, I think Harvey Norman is more a property company and an operator of a business model than they are actually a retailer. And that's probably been pretty well understood, I think, by most in the market for at least the last decade and a half, while Jerry and his wife have made that very clear. I think what was interesting, we were talking before about, was this season just business as usual? Well, Harvey Norman's historic 10-year growth rate of earnings has been 4.2% per annum, just faster than inflation, sort of in line with that property retailer model. And what did they report this year? 4.9, so well within business as usual changes. I think from an investor who wants to own Harvey Norman point of view, you've got to ask the two classic questions, which is number one, is this inside your circle of competence? Because retail and property are both inherently cyclical, so you're getting both exposures there. So if you're someone like us at Teaminvest who wants to be virtually certain earnings are going to rise year after year with great stability, Harvey Norman doesn't quite meet our requirements. But having said that, it's not far off, and it continues to print money at a slightly faster rate than inflation. So if you can buy it like you can at the moment on a PE of around 10, 11, it may not be a bad investment, but bear in mind always, it's got to be in the top 20 or 30 you want to own. And for me, and probably for our members, Harvey Norman doesn't meet that requirement, but still a wonderful business.
All right, well, I'll take that as a hold then for you, if you're there.
Yep.
Ben, I guess your comment more broadly on what you're seeing in the retail sector at the moment, particularly look this week too, we've had that inflation read, likelihood that we're getting another rate hike from the RBA.
Yeah, maybe. I mean, I think the bond market's priced 38% that we'll get
100% by November.
Yeah, I know. It is jumping around. I would say the stock's really good value at the moment. Andrew's right. It's a pretty consistent, albeit fairly low growth retailer that does what it does very well. I think from memory, nearly half of the share price at the current level would be property backed in terms of its asset backing. You've got to remember those properties are probably worth less in this interest rate environment we find ourselves in now than they were at the start of the year, which might also explain why the share price has come off. So look, I think it's a good divvy is one thing I point out. You're getting 6% fully franked on that 27 cents. So if you're an income investor, you'd probably be more interested in this sort of business. If you're a growth investor, you're probably less interested. So I'd kind of agree it's a hold to, I'd sort of say if you could get a bit weaker, it starts to look pretty interesting. But it's not a business we own.
Yep. Okay. All right. Well, that is a double hold for our stock of the day, Harvey Norman, the retailer come property stock.